All right, John, well, to get a unique perspective on Groupon, let's bring in a longtime hedge fund manager and value investor, Jim Bitzer, Senior Managing Director of Falcon Point Capital. In my mind, one of the sharpest investors in the Bay Area, exactly the kind of person that Groupon's bankers will target for this IPO. So, Jim, when you looked at this S1, what did you make of Groupon? We hadn't seen the numbers before.
Yeah, I was at first sort of amazed at the revenue growth. It's one of the fastest revenue growing stories I've ever seen.
It's huge.
Yeah, in such a short time that they can grow. The subscriber growth has been tremendous. The number of merchants added, so it is definitely a growth story, and the market is starved for real, true organic growth stories. However, the other big thing that stands out is the company is losing money and losing more money every year, and if you read the S1, they don't necessarily tell you they plan to make money anytime soon. They really sort of on that hell-bent for growth type attitude, and so the question will be, how will that be accepted in the market over time?
Well, and what does it mean? I mean, the prospectus very specifically says we will not be profitable, may not be profitable. Of course, the chairman said something different to me on the phone last week, which is the subject of a whole other conversation. But when you looked at that explosion of costs for that business, what jumped out at you, if anything?
Well, it's a lot of the costs are the marketing costs or subscriber ad costs, and they're very, very large. But I actually quickly calculated the cost per sub they're adding. It's not very high. It's in the $5 range. So if those subscribers do stay and continue to buy from them, they're very valuable. But I think that's to be seen. We've talked about the number of new competitors out there and the very low barriers to entry.
Right.
So the question I'd love to ask them is, how long do the subs stay? What is the turnover?
Well, if you look at the way they value the things in the prospectus, I think they figure the lifetime of a customer is 4.5 years, which is an interesting calculation for a company that's about 2 years old. They don't know really how long.
They don't know that, and there's more and more sites coming. And in fact, I personally have not used Groupon, but I've talked to a number of the younger guys in my shop, and they all do. But there's actually aggregation sites now that will feed you both Groupons and Living Social and Groupon type things from 10 of their sites. Right. So I'm not sure the loyalty is going to be there over time, and that will be one of the big questions to the sustainability of it.
One of our contributors, Paul Kudrowski, we talked to him last week about the Groupon deal, and he had a lot of interesting thoughts. Why don't you listen to this one of them?
Okay.
It's hugely impressive, but not that much more impressive than if I started selling dollars for 50 cents. People love a bargain, and so surprisingly, you're going to get a huge flood of people, and this is the right model at the right time. But that doesn't prove out the model. It just proves that if I can bring a lot of users if I sell stuff for half off. Big surprise.
So yeah, so he's saying selling a dollar for 50 cents is a popular business model, but not a successful business.
Yeah, it's just going to be interesting, the sustainability of it. I mean, it reminds me a little bit of the go-go internet days. All kinds of companies came, Amazon to Pets.com, okay? Amazon's platform proved sustainable. They're still around. Pets.com, I can't remember how long it lasted. It wasn't very long. It will be interesting to see how this one plays out. I would say just for our own personal taste, we prefer companies that have earnings and have a clear path to generating earnings.
Well, give me an example, because I know you look at a lot of technology companies, and you're looking at companies that have those revenues and those earnings that are in some of these spaces like technology and local and mobile.
No, that's right. Obviously, local-based advertising is a big area. We own a tiny company called Global Traffic Networks. It's about 200 million market cap. You pay about 7 times enterprise value to the current earnings, which is 2 advertising businesses.
Wait, Global Traffic Networks. Oh, we've got them scheduled on the show next week, actually.
Do you really?
Yeah, they're going to show.
It's a great little story. So they have a traffic advertising business in Australia, Canada, and the UK, and you get that business for like 7 to 8 times EBITDA. But what the market doesn't know about yet, they have a brand new service they just launched in March, like just a couple months ago, that is traffic alerts on your cell phone. And they're going to sell advertising along with that. And ultimately, these cell phones are giving you localized traffic alerts. So they will be selling localized advertising over time. So you're sort of getting the local advertising for free in this model.
But thrown on top of a business that's already throwing off profit, free cash flow from this business?
Yes, free cash flow, very good free cash flow, very high incremental margins, good free cash flow, and no one knows about this new business. Now, it is very new. They just launched it in March. The last I talked to them, they had 100,000 subs or so. So it's very new. First advertiser was Lumber Liquidators. We heard that.
Yeah.
So it's kind of an exciting way to get the same kind of localized medium.
It's an interesting space because sometimes we focus only on the big companies. There's so many other people looking at the same areas trying to make money. So Jim Bitzer, glad to have you join us. As I mentioned, as you know, I'm a guy, I always call you up asking for what's going on and what you see in the world. So glad to have that here for our viewers. All right, John.
Thank you for having me.